So hi everybody, this is Hustle Hub. I'm Giacomo and today we're covering McDonald's. So this is one of the stocks that you asked me for. So before we get into the video, make sure to like, subscribe, comment which stocks you want me to analyze next, and we're ready to go. Just one thing, if you want to use the same databases that I use for this analysis, the link will be in the description. So let's go. First of all, McDonald's, very household name. Um, not not a growth stock, is very much dividend stock, is very well established. So the growth opportunities are not that great, but it has delivered very well in terms of dividends, and even though it delivers a lot of dividends, the stock has performed relatively well for the sector where it operates compared to a lot of other restaurant chains and fast food businesses. So let's see what Wall Street thinks of McDonald's right now. So we can see that even though there's a lot of turmoil, McDonald's has performed relatively well compared to the overall market because it wasn't that affected by the geopolitical turmoil, even though it has left Russia. So we can see the price targets. We haven't had new price targets in the last month or so, but we can still gather some data out of Wall Street. So we can see that 90% of analysts that have made reports on McDonald's still have a buy recommendation, and about 10% have a hold recommendation. Next, let's see which analysts have had the best track record for McDonald's. So we can see that the best performing ones have lowered a little bit the price target, but not too much. Not even close to the corrections we see in other sectors that are more heavily affected by the further fragmentation of the marketplace. So let's see the best performing analysts on the chart. Let's see Piper Sandler and Deutsche Bank. Here it is. Let's take Piper Sandler, and then we'll see Deutsche. So the Deutsche report is more recent, and we can see that one of the best performing analysts for McDonald's has changed from buy to a hold recommendation. So that's not great, but given the fact that we're heading for a more and more likely recession, that is not that bad compared to the overall market. So let's see somebody else. Let's see from JP Morgan. We can see that the report is not that recent, but yes, we can see that it's not that recent, but it has changed the recommendation with a lower price target as well. So let's see all the recommendations again. So even though they are not that recent. I mean, about a month and a half or something like that. One very important thing that we can notice, even though they have all reviewed their price targets going downwards, we can still see that everyone still has a price target that is above the current trading price. So that's a very important indicator. Um, that's a very interesting one because they probably think that McDonald's can stay very stable, more stable than the market as a whole. So a household name in a difficult time could be a great choice, and these price targets could show that Wall Street still backs McDonald's, and maybe it is more attractive now given the discount that it has right now compared to 6 months ago, for example. So that's very interesting. Let's have a blueprint of the current situation for McDonald's. So it has a market cap of $174 billion, income 6 billion, sales, a lot of sales. Dividends, it pays honest an honest amount in dividends, pretty good amount, and we'll see how it has done over time with dividends. Price earning ratio is a bit high for the sector where McDonald's operates. It's still pretty optimistic, but we can see that McDonald's is financially strong, and it is such a recognized name, such an important brand, that maybe it's worth paying a little bit more, but having a strong name, a strong brand in your portfolio. So we can see the latest reports, and nothing very important came out on the news about McDonald's. So here's some data, some accounting data for McDonald's, but I have made a small spreadsheet to give you a better perspective of how McDonald's has done over time. So we can see that McDonald's hasn't grown that much in revenue. It has lowered just a little bit, not too much, but the EBITDA is still strong, very strong. So we can see that even though the revenue is not the same, the EBITDA is strong and it has improved over time. The debt is around $49 billion, which for the market cap that McDonald's currently has, it is totally manageable. The market cap, I did it a few weeks ago, but it's still very high, and we can see that the ratios are a bit high, but we can understand why, because McDonald's is considered a safe bet, a lot safer compared to other stocks in the market right now. So when we look at the outstanding shares, we can see a very important thing. We can see that McDonald's over time has bought back shares. So that's a very interesting thing to see. Very good for the shareholders. McDonald's hasn't diluted its equity base, but it has bought back stocks on the market with the additional cash it had. So it has done very good for the shareholders in the stock. We can see that the earnings per share have improved, and also the dividend over time has increased, almost doubled in the last 10 years. So that's a very good thing for the shareholders, and this track record is a good thing because it shows that McDonald's is able to reward shareholders over time. So another very important thing to notice when it comes to McDonald's is that McDonald's has a very um, peculiar business model. It owns a lot of the properties where it operates. It owns $38 billion worth of properties, and it owns $38 billion worth of properties that are divided in 32 billion worth of buildings and above $6 billion worth of land. It has $6.5 billion in free cash flow, and around half of the revenue for McDonald's comes from the United States, and the rest comes from the rest of the world. So McDonald's is not the kind of stock that could be impacted that much by the geopolitical turmoil. So that could be a safe bet, safer compared to other stocks in the market. So that's a very good thing, and that's probably why it's trading at relatively high ratios for the restaurant business, the fast food business. Um, in the case of McDonald's, and it trades relatively high with high ratios compared to its competitors. So this is the overlook that I give for McDonald's. I'm quite positive about it, but make sure to do your own research before investing. Um, if you like this video, make sure to drop a like, subscribe to the channel for more videos like this, and comment which stocks you want me to analyze next. The links to the databases that I use to gather all this information are in the description, so make sure to check them out if you're interested. See you next time. I'm Giacomo. This is Hustle Hub.